Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, December 12th, 2008. Yesterday evening, the Senate voted on and rejected the auto industry bailout after it had passed the House. The news set off a wave of risk aversion which boosted the yen. The Treasury today, however, said it was ready to lend money to automakers following the failed vote. Also, the White House said it might use some of the money set aside as part of the financial bailout to fund the rescue package. Global stocks faltered overnight as a result of the failed auto sector bailout vote. The Nikkei 225, the main benchmark in Japan, was down 5.6%, and shares in Sydney were down 2.3%. The Aussie yen pair fell almost 400 pips to test support from last week near 57.64. The pair managed to recover a good deal of its losses, but it did bounce down off its new support turn resistance at 60.60. Industrial production in the Eurozone plunged in October with the monthly rate down 1.2%, while the annual rate was down 5.3%. That year-over-year change is the worst in 15 years, as companies cut back on investment spending amid the recession. The Euro-Yen pair saw a sharp 480 pip drop on increased risk aversion following the failed Senate vote from the U.S. The pair found support at 117.50 and actually managed to pair all of its losses by noontime in New York. The industrial production news stalled the rally for a little while, but Euro strength overcame the weak fundamental release. U.S. retail sales fell for a fifth straight month, down 1.8% in November. Despite an increase at electronic and department stores, weaker sales at car dealers, and a 15% drop in sales at gas stations kept the headline number negative. Gas station sales were down as the price for gas fell by a historic amount. Producer prices fell 2.2% in November, following a record 2.8% decline in October. With gas prices down a record amount during the month and a deep recession pressuring prices on the downside, the drop is the fourth straight month producer prices have decreased. Core prices, which exclude energy and food, rose 0.1% after being up 0.4% in October. Inflation concerns are rapidly vanishing, and the Fed is expected to cut rates to near historic lows next week. U.S. business inventories fell more than expected during October. Inventories were down 0.6% as sales decreased 3.5% on the month. Usually, the more stockpiles are run down, the more businesses would buy to replenish their inventory, thus boosting economic activity. However, with sales plummeting, companies will most likely try and keep their inventory lean during this holiday shopping season. In a fourth release from the U.S., the preliminary release of December's UMich consumer sentiment showed a marked improvement compared to November, with the index climbing to 59.1. The recent rally in the euro-dollar pair stalled in today's session, with price moving in choppy sideways action. A new level of resistance may be forming at 1.3415 after the pair climbed 650 pips this week. In a look at a final yen pair, we see the dollar falling to 88.17 on the bout of risk aversion we documented earlier. That was a 13-year low for the dollar against the yen and reflects the yen's strength during times of weak investor sentiment. The dollar managed to pair most of its losses as the news that the White House was looking at other options to push through a rescue of Detroit helped to lift stocks into positive territory in afternoon trading. Next week starts with the Tenkan survey from Japan, housing prices from the UK, and industrial production data from the US. Tuesday brings consumer price data from the UK and US, along with the interest rate decision from the Federal Reserve. And that wraps up this week in the Forex markets. Thank you very much for joining us here at CMSFX.com, and have a great weekend.